Shopify shares falling here, off just about 4%, despite its most recent earnings report, where the company beat on both the top and bottom lines. Revenue $1.73 billion, adjusted EPS of 7 cents. Let's talk about these results with Gil Luria, D.A. Davidson Managing Director. Gil, it's great to see you here. So quick first glance here at these numbers. They look decent compared to what we're expected to see on the street, yet we're seeing the stock fall in after-hours trading. Why?
It's one of those situations where the expectations were even higher, especially for guides. The results for the quarter itself are very good. They grew a lot faster than we thought, and they're more profitable. And that's before the price increases that they took are incorporated into their numbers. So in terms of 2022, they ended that very well. In terms of 2023, their guidance for high teen revenue growth was probably a little less than investors expected, given that they are taking these big price increases right now.
Yeah, those price increases are, to your point, massive, 33%. How sticky is that service? How much do you think it will propel their Q1 numbers?
It's very sticky. Their Shopify merchants really love the product. They love using it. It's not a big part of their spend. So spending a third more than a small number for them is not going to be the factor that gets them to switch away from Shopify, especially since most of them buy multiple services from Shopify. Not all of those prices have gone up. So I don't actually think that they're going to have much attrition from these price increases, which shows you how important they are to their merchants.
Wow.
Okay, when you take into account the growth that we're expected to see in the e-commerce segment here, clearly Shopify well-positioned. Do you think that they are actually in a position to outgrow the e-commerce market? And what does that exactly look like?
They have been, and it looks like they're in a very good position to continue to do so. And that's because they're part of what's driving the democratization of online retail. It used to be that the best way you could sell was through Amazon or through another marketplace like Walmart or eBay. And what Shopify has made it possible is for all these merchants to sell directly to their customer, to own the relationship and do so relatively easily and at a relatively low price. So they have been growing faster than e-commerce. We'd expect that to continue.
Yeah, and they do have competitors, many of them, coming for them. What is their competitive advantage in that sector?
They have a large head start. They're bigger than the next size competitor by a factor, excluding obviously Amazon, which is both a competitor and a partner. They're much bigger than the next size competitor. And again, they provide more services. Their prices are not that different than the next size competitor. And because they have the multiple services, it's harder to switch away once a merchant starts with Shopify. But that's to say there's such a dynamic ecosystem. And to your point earlier, there's a lot of e-commerce growth. A lot of other providers are going to be able to succeed here. It's just that there's no reason to think Shopify is going to lose share to any of them.
And when you take a look at some of the moves that Shopify has made, they named a new CFO back in September. We've already seen the price hikes, one of those initiatives under the new CFO. We also heard about layoffs. That was several months ago, one of the first tech companies really to announce layoffs. Do you see those cost-cutting measures carrying into this year? And if so, what do you think we could see then from Shopify as the focus really does become more focused on profitability?
Yeah, it looks like their guidance for this year is for operating expense and gross and COGS to grow slower than revenue. So it looks like those cost cuts are translating into their outlook. Their profitability dipped quite a bit last year, so it makes sense that that would happen. And they didn't need to show discipline once that happened. They'd been profitable really since inception. Last year was an aberration. They needed to get that discipline back, and they're showing that in their outlook for this year.
All right, Gil Luria, D.A. Davidson, good to see you, sir. Thanks so much.